Robschild. No investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday, May 30th, 2025. Today's episode begins with our headline, Core PCE, Not So Sticky Anymore, 4-year low. The Federal Reserve's favorite gauge of inflation is the personal consumption expenditures, and the core year over year came out lower than the expected amount of 2.6%, only 2.5%. This is while the headline PCE year over year, including the volatile food and energy categories, was only 2.1%. By that metric, we're pretty much at the Fed target already, but this is a new 4-year low. One way to chart this is from investing.com. They have the U.S. Core PCE Price Index year over year. Every one of these monthly updates shows how prices have changed since 12 months ago. And as you can see, we have not had it be at 2.5% since 2021. We almost got there in June, July, and August of 2024. However, we never got to this low since 2021. Many people have been talking about inflation getting down to around 3% and sort of getting quote-unquote sticky in this area. And yes, it has been sticky, and now it is dropping, finding a new 4-year low at 2.5%. One of the reasons the stock market, in my opinion, couldn't get super bullish today is the fact that when you scroll out on this chart, going back to 1975, you can see that when we get into recessionary periods, we see disinflation right here, for example, in 2008, going straight into the Great Financial Crisis, PCE dropping from 2.3% in January of 2008 to a low, for example, of 1% in October of 2009, and then staying quite low up until late 2011. It's important to remember that disinflation, lower inflation, is good news until it's not. The Federal Reserve has been purposefully trying to get people to stop investing, stop using money productively, put money into savings because they offer a really good return compared to whatever else you can get. It's been doing this for 2.5 years, and now that inflation is starting to unstick to the downside, my crystal ball says chaos ahead. Better watch out. But that's just me and my crystal ball. One other piece I want to add to this today, another really good YouTuber that I follow, Bravo's Research. If you haven't heard of him, please follow him. He has been sort of a perma-bull for most of his time on YouTube. He was previously known as Game of Trades. Even he is starting to get a little nervous where we are. And one of the charts that he shared in a recent video I wanted to share with you involving crude oil and unemployment. I encourage you to watch his video. This is straight from it, a screenshot from Bravo's Research. What we have here in yellow is the price of oil, crude oil, and the blue line is the unemployment rate. And what we see here is when crude oil rises, a lot of the time, most of the time, pretty much all the time, we get a steep rise in unemployment. You get a spike in oil prices, and we get steepening of unemployment. Spike in oil prices, unemployment rising. Obviously, when unemployment is rising like this, that's when recessions are happening. And then going into the Great Financial Crisis, oil skyrocketing, and then what follows? Unemployment skyrocketing. Now, we've had since 2020 sort of a large rise in crude oil prices, followed by a decrease to levels now not seen since 2021. And we have had unemployment rise enough to trigger the Somme rule. a year ago. Typically, the SOM rule says that a recession comes a little sooner. You know, for those of you that think I'm a perma bear here, I have my reasons here for being bearish. Again, look in my description, click through my website to understand my full view. But this is just another piece of the puzzle that's becoming obvious to me. Any way which you put it, considering the fact that gold to oil is at a absolute record high, in other words, oil has never been cheaper to the price of gold. If we get any kind of reversion, including gold going down a bit and oil going up, imagine the consequences of crude oil rising in this current environment. I suspect with my crystal ball and all that the next rise in crude oil is very likely to follow with unemployment rising, just as it has many times in the past. Or maybe this move here was the move that will trigger unemployment to rise, and we don't even need oil to spike here. But oil spiking right now for where things currently are adds to the potential danger of markets right now. Next on the agenda, community topics. What moves, if any, did you make today? Comment below. Your ideas are inspiring, so much so that one person's idea of getting leverage in the cannabis industry got me to buy a little chunk of MSOX, a leveraged cannabis fund. I saw someone comment yesterday they put $1,000 into this. For me, this has to be an amount that if I were to lose every penny of it, that I could still sleep well at night and be like, okay, I'm going to be fine if I lose this entire amount. This is the kind of money I think is appropriate for me anyway to get into this. And again, just to reiterate 1,000-fold, I never give any advice on this channel. Everything that you do is your own decision. But my decision today was to buy a little bit of MSOX. I think max fear of investing in the cannabis industry has been achieved. And I think there's a lot of potential upside. Coming up next week, we have Tuesday job openings. This is huge. This is a big piece of the beverage curve, something that the Federal Reserve has been talking about lately. It has a big effect on the jobs, the unemployment. If there's no openings and people are like, oh, we can't hire anybody anymore, watch out. That has been dropping. We'll see if it continues to drop. We also have Wednesday ADP employment, which kind of acts as a precursor to the most important report of every month, of course, the unemployment employment report. This is the one on that chart that's what it's tracking. How many people in the United States say, I want a job, and they can't get one. Many economists are expecting at this point this to be rising sooner than later. But we will see what happens on Friday. Also coming up, as always, continuous tariff updates. The latest news here is China didn't do what they said they were going to do on the tariff situation. So continuous updates. The soap opera continues is the way I would put it. We also have, federal budget updates coming up. Very important piece of the economic puzzle. As always, thank you so much for watching. Subscribing buttons right here. You put your mouse over the stars and the charts, and then it says subscribe. You just click it. Commenting. I love all of your comments. And supporting. I haven't decided if I'm going to monetize my channel once I get to that 1,000 subscriber mark. The way I'm sort of thinking of it now is if I get enough support from you guys directly, maybe I won't monetize the channel. You'll get to have minimal ads. And this is how you support. I take donations anywhere from 2 cents and higher. And all your previous support has been greatly appreciated. These are the daily reminders and macro views. Look at the website with the link in the description of this video to read the explanations. These are Still, the crystal ball ratings, they haven't changed. And the Robschild portfolio. One thing to add to the long term now is just a little bit of MSOX. On to the charts, starting with the SPX, the S&P 500, eking out, or rather dropping by 0.10%, 50 cents. Such a small move that I almost titled this video, Mr. Market is getting dazed and confused. All of these tariff updates have just been exhausting. Add to this that it is summertime and a lot of professionals close their books, sell in May and go away, as they say. After all, I believe June is tomorrow, or rather Sunday. There's nothing to get super bullish or bearish about at this exact moment. The way that I see it is if we start getting a lot of very strong corporate earnings coming out and unemployment perhaps dropping next week, those could be catalysts to perhaps send Mr. Market higher. And if we get the opposite, maybe that could be the thing that starts to get us more bearish again. Some chartists are saying, maybe if yields start dropping here along with lower PCE data, Mr. Market can keep going up. But I'm just going to state right now, you look at May 19th, 20th, 21st, we are going currently lower. It was what it looks like to me, all while the 10-year yield has been dropping. So if the 10-year note yield going lower is bullish for markets, well, it's dropping, guys. Where's the bulls? We also have the dollar index going basically completely flat, also dazed and confused, along with crude oil completely flat, also dazed and confused, along with longer yields dropping recently. TLT got a little bit of a bid today, going up 0.15%, not a lot. I also wanted to bring up Bitcoin for two reasons. First of all, this pattern that I have been talking about in the show over the past few days, being a bear flag here. Sorry about that. Let's try again. This being the red pole here, we had a bear flag, then it broke down, and I said it was looking to get down to the 104 area, and that's exactly where we are. We bottomed today actually at $103,727 per Bitcoin. One other chart pattern that I've been encountering other traders talk about that I wanted to share with you guys is this ginormous potential inverse head and shoulders developing. Ron Walker is the one that kind of let me see this. And, don't count your chickens before they hatch kind of a thing. But yeah, look at this thing. If this were to play out to the upside, I mean, what is this? If we take this line here, the head to the neck, we break it above there. So a target of 147,000 on Bitcoin. If it plays out that way, again, if this turns out to be the right shoulder and then breaks and then confirms and then, you get enough confirmation signals above this neckline here. Looks like Bitcoin may get up there. Personally, I think we'll need to see a lot of very positive, great news, mostly with earnings and jobs, and inflation somehow staying low. I mean, is this going to be the soft landing that sort of makes Bitcoin and everything else soar higher? It could, but I have my doubts. But what do I know? I'm just a guy with a crystal ball, and that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.